Hey, good morning. Today is November 1st, 2023, and I am going to do another edition of the Wednesday Live Show. And today, of course, as you know, is Fed Announcement Day. It's pretty interesting how I end up doing these shows on days like this, Fed Announcement Days, and I guess they always come on a Wednesday, and I do the show on a Wednesday, so it is what it is. And of course, everybody expects the Fed to hold rates steady, and of course, the important thing is going to be the language of whether they leave the door open for another rate hike or whether they're done. And I think the consensus seems to be that they're done um, amongst a lot of important people, talking heads, people that experts, so-called experts, think that the Fed's done hiking rates, and it's created this rate hike cycle is one of the fastest ones in history, as I'm sure you've seen. Um, and so anyway, the consensus is they're going to leave rates unchanged. They're done, and so it's going to be interesting because of the fact that the whole thing about hiking rates is to counteract all the inflation that we've seen. And so, it's kind of crazy. The general price level is probably 30% higher than it was just a few years ago. So the damage has already been done, right? I mean, I mentioned this a few times recently is inflation, the rate of inflation could go back to zero and the price of everything's still going to be expensive, more expensive than it was. Prices aren't coming back down, right? And so there's a lot of talk now. We're getting to the time of the year where everybody's talking about a year-end rally and a soft landing and all that good stuff. So it's gonna be an interesting next couple of months, right? We have 2 months till the end of the year, and so there's a lot of crazy stuff going on. There's some breaking news now. Yeah, today's one of those days where there was a lot of talk this morning about the Treasury auction and all that, and I don't remember people ever caring about that, but all of a sudden that was a big deal. Oh, this is job openings, right? And so anyway, today's like chock full of economic data, and then there's the Fed announcement, and of course the press conference afterwards. It's always interesting, and the market has kind of well, up until the past few days, the market's been really sort of rough, and now it's starting to kind of find a bottom here. So today I'm going to start with my long-term chart, and it might look a little bit different than the past couple times I pulled it up because I was looking at a candlestick chart, and I was looking at a candlestick chart, and so if you kind of cut this red line right here is like my major trend line. If I was looking at a candlestick chart, right, it's got these couple of lows here, um, and then this is the trend line that encompasses like the bear market low of the pandemic. This is April, or yeah, it was March of 2020, right? So this goes back a way. So there's the pandemic sell-off and the absolute dead low of that, and then there's the October low of this bear market, right? That was the bear market there from the beginning of 2022 to bottomed in October, and so here's where we are. And of course, this is should look familiar to you. But the interesting thing about this, if you zoom in, so we came right down and basically, if this is a candlestick chart, this is just the tail of the candle here. So this is basically across the bodies. And I saw different people, different markups with different trend lines that were similar to this. This is a weekly chart, by the way. And of course, so we came down and hit that sort of trend line support there actually poked at it, closed right under it. So this is kind of a cool chart for the bigger picture here, the weekly. And so here you go. There's right here, 2024. So if you look at this line right here is the end of the year. So the question is, do we get a year-end rally, up here? I would be I would be shocked to see it rally and break above this trend line. But then again, I wouldn't be shocked to see rally up into this area here. So I think I saw something the other day about how it was Oppenheimer or something lowered their year-end price target, and that was kind of funny because these year-end price targets like back in the when we had this summer rally, I remember distinctly Goldman Sachs raising their year-end price target after the market had rallied up to 4,500 something, and then now, down here. But anyway, year-end price targets. Geez, I don't know. It's still up in the air, right? I mean, there's as we talked about last week, there's still a lot of potential um, black swans or gray swans, I suppose you could call them out there. I mean, there's a lot of crazy stuff going on. Wars in the Middle East is probably one of the big ones, but the rise in interest rates, the fact that the there's like seven stocks holding up the market, and the majority of stocks look like crap. Um, this earnings season, I'm seeing lots of stocks just absolutely getting decimated on earnings, and it's kind of weird because earnings seasons. We've always said that earnings are a coin flip, but we've seen a lot of stocks really get hit. Especially kind of the more like the Russell 2000 type stocks or the smaller S&P ones and that. But I mean, it's crazy to see a stock get hit by 10, 20% after they release earnings. So anyway, back to the S&P here. So it held this. Let me go to let me go to my daily support and resistance chart. We talked about last week, I think we talked about how the fact that the RSI down here got basically hit 30. Is it 30? Yeah. In the good old days when I was using a different charting program, I had 80 and 20 set, but I think this is just the standard 70 and 30. But anyway, RSI got sort of down into oversold territory. There was no question whatsoever that this sell-off right here, the market got extremely oversold, right? I mean, it went from 4,400 to 4,100 basically in a straight line in like in 2 weeks. So extremely oversold. And then we got that on this Monday, right? This Monday, we got this sort of gap up and follow through, which left like a perfect pivot low candle there. I mean, this is like textbook pivot low, and of course you'll see one over here too. There was one in this sell off in August, right? Same sort of thing. It wasn't quite as steep, but you got sort of the big sell off, and then interestingly enough, the one in August, it actually you got the gap down, and then the rally that created the pivot low. And so this pivot low started with a gap up and the sell down, but then, the following day. So anyway, you can see sort of the similarities. Like a lot of times I've talked about looking at this instead of looking at the price bars, you look at sort of the space in between them, right? Like look at the white space, and so the market tends to like form these cups, and when it sells off real steep, you get this sort of pivot low rally, and you can see like sort of the space in between it. But anyway, these these three price bars right here, And these three price bars, 3 or 4 price bars, I mean, have a very similar sort of looking pattern to them, and that's typically what happens when the market, sells off and gets extremely oversold. And consequently, like the highs, it's the same sort of thing. You get a pivot high, you get a big run up, you get a pivot high, and a couple of days later, thing of it is, you need confirmation, right? And then of course you get these areas like this, which is basically just like sort of a consolidation. There's nothing happening here. So, but anyway, so where we are now, interestingly enough, it broke down below that major resistance point, but 4100 there. 4100 you can kind of see is going back over here, you can see, a lot of sort of price action right at that level too. So that acted as, a support level. That would be obviously 4100 is like sort of the really big kahuna right now as far as price levels go, because that was the most recent low. And seasonally speaking, we're in a strong we're in like the strong period for the market, seasonally speaking. Market almost typically rallies in November. And over all the years, and I don't have the stats on this, although I've seen some stats on this, but generally speaking, the funny thing, speaking of stats, is I did see a stat about the market typically rallies in November, like, 1.2% or something like that over the past, since 1950 or whatever. But the funny thing about that, I mean, 1.2% is just like, is less than normal price fluctuation, right? It really is. And so when you average all that kind of stuff out, sometimes I see, there's people that like to post all these different statistics, usually that support their bullish case. Like November's typically an up month by 1.2%. But the funny thing is that that's just normal price fluctuation. I mean, we've seen the market, in the past couple of weeks move, 1.2% in a session. And so, anyway, that's neither here nor there. There's a bunch of overhead resistance. There's tons of overhead resistance here. First of all, you got this is the support resistance zone, and broke down below it, got oversold. 200-day moving average is just above, right? So that's going to act as a resistance. These recent lows here, I don't want to change my chart, but you can see, like, these 4 days where the low down here was roughly, call it 42.15 to 42.20, say. There's quite a few days, and that's obviously that's just above. um, it's not that far above. So anyhow, oh yeah, I mean that's just another little push higher today. What today's gonna be wild because of because of the Fed announcement and Powell's press conference. And so if I had to guess, I would say he's probably going to, say that they're going to leave the door open for another rate hike, but they're probably going to hold rates and leave the door open for another rate hike in case inflation. See, here's the thing is, I talked about this a long time ago when they embarked on this rate hike cycle, is that they let the inflation genie out of the bottle, and really the only tool that they have, well, actually they got a couple of tools, I suppose, but their main tool is just raising interest rates, right? And so inflation got out of hand, peaked last summer at like 9% or something crazy. But anyway, and a lot of it has to do with the price of oil too, which is kind of crazy because the price of oil has actually been coming down since all this turmoil in the Middle East started. But it's a different story. But anyway, I mean, so the Fed has jacked up rates and jacked up rates and this and that, and the economy still seems to be sort of hanging on, if you believe the numbers that are coming out. And so, everybody's talking about soft landing, this and that, year-end rally. Those are the two big themes now. Soft landing and year-end rally. But it's going to be interesting to see how this all plays out. If I zoom out to the end of the year here, um, I mean, the year-end price targets are practically meaningless, and especially based on the idea that they like to come out with them, the prior year, right at the beginning of the year. It makes sense to. I wanted to see. I wanted to see. I don't want to mess up this trend line by moving it, so I'm just gonna leave it there. Save this real quick. Yeah, I wanted to see kind of where the spot was that these two trend lines converge. So if you think about it, I mean, if you think about it and you look at this tree, first there's the 200-day moving average. There's a lot of resistance right here. We've had a pretty good 3-day run up so far. Today's not over, obviously, but we've had a pretty good 3-day run up off of that pivot low, gone from just over 4,100 to over 4,200, and so there might be some backing and filling, but um, if we do get a year-end rally, I would guess, if I just had to guess, I'd say we land somewhere in the in the 4300s, right? And that's just a guess. I mean, things could, quite frankly, there's a lot of potential out there for things to fall apart quickly. So, um, obviously we can lean towards a year-end rally, but I'm going to say all bets are off below 4100. And the simple reason is that, I mean, that's clearly at this point here, I mean, we peaked in the summertime, and so markets, the actual S&P is still up from 3800 to 4200, so it's still up for the year, right? Um, Even though we looked at the RSP. Well, let's just look at the RSP, which is the equal weighted S&P. Yeah, it's a whole different ball game, see? And that's why things appear to be so dysfunctional to me, is because, aside from, the magnificent seven stocks, or even, if you could probably find, 20 big cap stocks that look pretty good. But if you take all that away, I mean, I'll even go out on a limb and say like 450 of the S&P 500 stocks don't look all that good. So this is the equal weighted S&P, and there's the beginning of the year, and look at where we are now. Right? I mean, these recent lows that we just saw were like the lows for the year, and so that's kind of, and of course everybody knows that, right? I mean, it's pretty apparent at this point that it's a narrow market, and so how that plays out, geez, I don't know how that ends up playing out. I mean, the best thing that could happen, I guess, for the bulls is that we get that year-end rally and we start to get some participation in more stocks. So, here's the cues. They've had just an incredible year, right? I mean, right at the beginning of the year, boom, the they started buying tech stocks, and so this has got the same sort of. I'm sure I saved. I'm just typed it. If I type in the ticker symbol, it just brings up basically a generic chart. But I would have. I have a chart of the Qs somewhere that have trend lines drawn on them, but same sort of thing there. The rally already happened, and all this peaked in the summer, and this latest sell-off just gave a little bit back, right? Maybe this May to mid-July rally was a little excessive, sort of based on AI, right? All the AI hype, and that's, speaking of which, I wanted to look at AMD. Just released earnings last night. I've been watching this chart for a while because it's got kind of a nice channel going here, right? Got kind of like that channel going, and so you can see it's getting a pretty decent little pop right here today on the earnings, which quite frankly, the earnings weren't all that great. I mean, the earnings, I think they beat revenue and beat estimates and all that kind of good stuff, but I think they guided down or, they didn't give a real rosy outlook, which is kind of interesting, but nevertheless, you got kind of a cup and handle. This is kind of a nice bull channel here, so this might be one to keep an eye on. So, um, the funny thing is that certain stocks, bad news is ignored. Oh, by the way, so this is one I'm keeping an eye on here, just to see what it does in this channel. Um, Especially after this October low and this sort of pattern here. This is kind of, you get a breakout here, it might look good. Speaking of which, Apple's coming out with earnings tomorrow, so that's going to be kind of interesting. Look at where it is now and look at where it was, back in, well, 2021. Let me zoom in here. See where's November? I can't really get it on the chart, but I guess, yeah, it would have been, around there. So amazingly enough, I want to see where November 1st is here. It's basically, I almost have it on the chart. There we go. 11/1. All right, so like right here. So it was like, 150 bucks. Apple was 150 bucks 2 years ago, and now it's 170. And of course, it's had a lot of, zigs and zags in between. This is going to be, switch to a weekly time frame here. Yeah, this is going to be oh geez, I hate when that happens. An interesting earnings to watch because obviously, so goes Apple, so goes the market. And it's just going to be interesting to see, whether there's a big move or not. Nowadays, a lot of people expect a company to come out with earnings and make a huge, substantial move, and they don't always. Um, here's what I want. There's my chart. Yeah. So I have this chart of Apple that actually has the earnings dates marked. Like there was, so the last earnings there, it had been going up and it actually gapped up and kept going based on those earnings. Geez, I'm not sure what this is here. That's another earnings. There we go. Okay. So this was the prior earnings right here. Look at that. Look at that trend higher. And then they came out with earnings and wasn't so hot last time. So I think that Apple's earnings tomorrow after the bell on top of, Fed Day today are going to be pretty important, and it's going to be interesting. It's going to be interesting to see what the reaction is. So that could potentially torpedo the rally, right? Potentially. So real quick, I mean, with the Fed announcement and kind of where we are right now, not a whole lot to talk about. Because when there's news like this, but I do want to look at the IWM. Here we go. My chart of the IWM. The symmetry on the IWM chart always amazes me, right? So, but anyway, and especially like, the symmetry over the past couple of years here. There's 2022. So, there's 2 years worth of pretty good symmetry, especially these big, rallies up into resistance and zigzags down into support. And so here you are. Right now and it's been pretty much a straight shot. There's, a couple of, just if you can even call these rallies, it's kind of like the one from last summer, same sort of thing. And the funny thing is, the timing on them was similar too, right? So this is 2022, and you had this huge sort of summer rally into like August basically. Um, yeah, it looks like end of July, August, and then a big sell down into October. And you had something very similar here, as far as like the peak right up here that literally matched up with that one, and then the sell down, into the timing's a little bit different. This one was steeper, but same sort of concept. And so you can see what happened last year. The IWM, kind of caught a bunch of support down here and it ended up like having a decent rally and then giving half of it back, and ended the year down there. But so, it's down on the year, but it's looking like, it's finding some support. And like I said before, typically the small caps are the ones where all the action is when you get that year-end rally. A lot of small caps sort of pick and wake up. So that'll be kind of interesting. We could see some backing and filling and retesting or whatever, um, like we did right here. 4 or 5 days and then a rally and another poke down or whatever. So I think a lot of what to expect from here is going to sort of be based on, I think it's going to be based on news events, right? That's sort of the big thing. The breadth of the market is terrible. Go back to my big chart here. The breadth of the market is not all that great. Handful of stocks holding everything up, this and that. And so, if we do get the proverbial year-end rally, I certainly I don't expect it to, you know, I think probably we'll end up somewhere in the middle of, this big pattern here. Although, hey, you never rule anything out. You start breaking these lows here, like if this trend line breaks, well, here's the thing is like if something happens that causes that trend line to break, then I would say all bets are off, is what I would say. So um, it's not if the trend line breaks. It's like if there's some sort of news event that causes the trend line to break, then all bets are off. But we're finding support where we should, and so probably looking a little bit of a rally. Um, but we'll just have to see, right? We'll just have to see. I mean, just a little bit of a bounce doesn't mean anything. Powell could say something today. There could be some sort of surprise. Apple could sell off on earnings. There's a lot that can go wrong. So to me, this is kind of the last line of defense, right? See, that's the whole thing about technical analysis. It's kind of like, a law of nature. If the markets, like if the market was potentially headed back, to 4,000 or below, it's going to break that trend line on the way. So if you see that trend line break, then, obviously all bets are off. But if things just kind of, wobble on as normal, then probably looking at, probably looking a little, and of course, I don't have the trend line drawn across the highs on this chart, but that's also sort of a good guide and overhead resistance. So we'll just have to see what happens. It'll be more interesting than anything today and tomorrow as far as the Fed announcement and Apple's earnings. So anyway, we'll talk about all that next week. I will be back, same time, same place next week.